All right, hey guys, welcome back. This is what I'm going to do today with this swing trading earnings is really just give you a primer of what's going to be coming in the class, and why, and you'll see why I'm taking time to do classes specific to swing trading earnings. This is just going to be another component to go into our swing trading toolbox. Because, everything that I've taught you guys so far has been technical. And as a teacher and as having years and years of experience in education, when I came into trading, one of the things I started looking at was, okay, what are the elements that you guys need in order to be successful, or what prospective traders need? Because I was a prospective trader and I needed to know what I needed to know. Watching somebody trade thousands and thousands of shares, and I'm sitting here with $1,500 in my pocket, made no sense. There was no way I could connect to that. And the strategies that I needed to be able to build my confidence and to understand, to develop the discipline and everything I needed, they had to be technical, they had to be more mechanical. So the first couple of strategies that I taught you guys, they work really, really well. You just have to be patient, wait for them to set up. And they have, if it doesn't work, you know exactly where to get out. Now, as we get a little further along, we start looking at more fundamental strategies. It's the same way in day trading, where I teach you in the beginning, I'm going to teach you some technical, more mechanical strategies. And then later on down the line, I'm going to introduce a couple of the more intuitive strategy or dealing with fundamentals, where you have to have already developed your discipline and your confidence in trading and all of that. That's why I don't really throw everything out there at once, and why I don't have everything that I do on the website, because it gets to the point where I only will work with traders that have got to that level, and then I'll start giving you some more advanced stuff. You got to show me that you're ready for it. And so, these earnings trades are a little bit more advanced, but I think you can manage your risk a little bit better on this than some of the more intuitive strategies. So this is kind of what we're going to be doing in the classes. I'm going to introduce you to how I look at earnings. Tell you what trading tools that I use, and a lot of this is really simple. You know me, I'm a KISS guy. Keep it simple, stupid. Show you how I scan for earnings and how I do technical analysis as it relates to earnings setups, the fundamental analysis, and then we talk about the strategies. There's only two. There's, you're gonna swing ahead of earnings, and then you can swing after earnings. And so I'm gonna go over what I sent you guys out early this week. I sent the email out because I wanted you to see, okay, this is what you're gonna be getting, and to kind of, get you acclimated to what you're going to be seeing. Now, this is what I send out when I'm doing aftermarket earnings. I'm expecting that to kick back up with this quarter, because more companies are going to have guidance. They're not going to throw it under the bus again. So I'm looking forward to doing that. But this is usually what you see. And what it's telling you, it's giving you the current chart, but it's telling you what it did the previous quarter, which is important. It's important to know what it did before. We need to know some of the history. And when it reported, it withdrew its previous guidance, because just like everything else. And so we have to take all of this into consideration. And usually when a company pulls its guidance, the stock's not going to move much when it opens up. But that was the previous earnings announcement. This one, we were expecting it to give its guidance and all of that. Here's the score. This gives me an indication of how much this thing can move. And we're going to talk about all of this in the class. I'm going to tell you exactly what that score means. And most of this I'm getting is from Earnings Whispers. This is well worth the subscription that I get. And I would recommend you guys that are interested in trading stocks on earnings that you invest in this. Because all I'm going to be giving you is going to be my summation of what I've read and the information that I've gotten. But this gives me a lot of information here as to what to expect on earnings this time. All right, so here's an excerpt from the email that I sent out. There's a couple of excerpts from the FedEx email that I sent out earlier. And it said the company has seen a decline during the quarter of its higher margin business-to-business services, obviously, because a lot of these businesses were shut down. But a significant spike in its lower margin e-commerce business. Duh. Common sense, right? That has left a wide gap in expectations as analysts cut their estimates throughout the quarter. But investors' expectations has risen. Analysts, I don't know whether they're brain dead analysts or, what is going to happen when you have all of these businesses and stores shutting down. How are these companies going to get their products out and services out, or mainly products? How are they going to get them out? So that's the first thing I'm thinking about. And I'm sure investors are thinking the same thing. People that are invested in UPS and the JB Hunt and the Knight Transportation, these guys are like, hey, they're licking their chops because we're going to be shipping more. And, investors are thinking this. And that's what I'm thinking. As an investor in UPS, that's what I'm thinking. That this is going to be good. Okay, then I go on to say, based on the weakness expected and the low margins, because again, the higher margin, that business is kind of dormant. We've got the lower margin business picking up, but it's picking up. So we have low margins, but there's still some good revenue coming in. So it would be reasonable to believe that the stock could still head to the lows on earnings before going higher in the coming quarters. But sentiment tells us that's already happened. The hit it was going to take, it took the last quarter. All right, so now we're looking forward. And remember, a stock trades on earnings is forward looking. It's looking ahead to the future. So where it sees itself 6 to 8 months from now, that's where it's going to be trading right now. And so if it took the hit already, then we're going to be looking for it to move to go even higher. All right, and so the chart that I put in there, and I gave you a lot of charts and other data that was in that email, and we'll kind of go through that. That's why it's going to take a couple of classes, because we're going to need to go through each of those things so you'll be able to really understand what information you're getting. But the chart does show a potential resistance at 140. We're going to look at the chart here in a minute. And a move above it could quickly move to the 157 level, which also happens to be where the stock gapped down lower on the early COVID-19 sell-off. And if margins are trending higher, if we, if the margins are slowly increasing, then it's going to break that upper trend line and it's going to continue to move higher. And that's what we were looking for. So if we look at the chart on FedEx, here's the chart here. Okay, and here's the trend line. Here's one descending resistance, and then here's the ascending resistance. If we broke through and we got up to 157, 158, what we're talking about, then this is the trend line that we were looking at breaking. And then you've got the 52-week highs you can take out. But we're not talking about it making this move all at once. We're talking about it setting up and then eventually making this move. So there's actually 3 different setups you could take on this. I just was talking about 2. But if this holds and we get over this resistance here around 165, we've got another leg up for a 52-week high break. That could run us up through 175, 180. I mean, that's a whole nother ball game. But what I'm looking at now is, okay, what is this stock doing now? Here we had a nice hit here, and we ran right into some solid resistance here right around 150. All right, so for me, this one between 148 and 150 is probably going to be key. That's going to be a key level here. So as we pull back and we made a lower high here, but here's a higher low bounce. We were starting to come off of this support. So I'm looking at this as, okay, this stock has had some issues. It took a hit on earnings before. Now we're recovering. Now businesses are starting to pick up a little bit. So their business to business stuff is going to pick up. But all of the other things that were the lower margins things are probably still going to be really, really strong. Shipping is still going to be really, really strong. And as a trader and an investor in a stock in this sector, I've been keeping an eye on it, and I'm pretty sure that this is going to continue to be strong. But the main thing is, if I take a trade, I need to have some type of level of support, significant support level that I can take the trade off of. All right, so here's what I'm looking at. This is the trader view chart. It's really the only thing that I could do that allows all of the trades to be on the same chart. So it's not my favorite charting to use, but it allows everything to be on the chart at one time. So like I said, I was looking for an area of support, right? I was looking for that area to buy off of. So just like anything else I do, if I'm finding a stock that's bottoming off support, the next day, if I'm going to buy it, the next day the candle has to open higher than the previous day's close, because that's going to tell me that there's a good chance that we're going to move higher off that support. If it opens below, then there's a good chance it might not make it. So I'm looking for it to open over it, and that's exactly what I did. We got over it, and looking at what I sent out, the resistance line is at 140. That's a really good target, a pre-earnings target. So if I could get in and catch the move to 140 prior to earnings, if we get a gap up on earnings, we could move through 157 and continue on. If we get a gap up, if we don't get a gap up, oh well. I got the first trade. I made some money off of it leading up into earnings, and I'll walk away with that. There's nothing wrong with that. So we just have to wait and let the stuff set up. That's the main thing. So I knew going into this around 140, and you can see we had a couple of nice areas of resistance here. So around 140 was going to be my target. I felt, hey, this was the last bounce up here. So 140 would be ideal. Even if it never made a new high, it would be an ideal place to take profit off of, taking it off the bounce. Then I had very good risk reward, because if this day it came back and it closed below this level, that's a trigger to take it off. And so we're not sitting there having to hold 8-9 points when we got our support right here. Now, had this support not been here, I would have had to look at this chart again and see, hey, okay, here's the low over here. Does this trade make sense? If I have a stop here around 126, I'm getting in at 131. My profit target is 140. Does that trade make sense? And then now I will determine, do I keep this on my watch? Do I look to engage this, or do I drop it? So here I had the support. I didn't have to worry about this. Do I want to risk $6 to make 7 or 8? Which, no, I probably wouldn't want to do that. But I will risk, $3 to make, $7 or $8. That makes sense. So it was a no-brainer when the stock opened higher than the previous day's close to take it. And then going into earnings, the day of earnings, it ran right up to that 140, and you take the trade off prior to earnings. This is not the strategy that you get in and hold through earnings. We have a day trading strategy that we use to trade this gap. Now, I know this entry seems in the middle of nowhere, but this is aftermarket. And these charts don't show you the price action aftermarket. But this is where, it shows you the entry, but it doesn't show the candles, which doesn't make sense. But that was the entry after earnings. Remember, I said if it gapped up on earnings and it held, then we're going to look for that 157 mark. All right, that's ideally what we're looking for. Or in this case, I was looking for the ascending resistance. That ascending resistance line that we saw right here. That's what I was looking for. So if it got stuck at 157, which is where it got stuck the night of earnings announcement, but remember, this is a swing trade. I'm looking for it to gap up more in the morning pre-market when people are waking up and saying, oh shit, this is up, I'm buying it. Those guys. Because those are the guys that we need to come in and move this up so that we could sell it as more unsuspecting people are coming in buying at the highs. So that's what we're looking to do. And that's exactly what we got. It hit the target up here, and then that same day it came all the way back. 156 was my stop on it. I could have put my stop all the way back here and I could still be in the trade. I'm not looking to do that because, like I said again, this thing can pull back and give us another trade. All right, you have something this strong and we're this close to 52-week high, I'll be ready to jump on this on a pullback for a move higher. So next week, this is still going to be on my watch. I know even though the earnings were this past week, the stocks that we swing on earnings could make multiple day moves. Now, I had no idea we would hit this the first day. I felt it may take 2 days or so to get to the top of that ascending resistance, but it just happened to hit it the first day that we were holding, and then it came back and stopped us out. So the question is, how lucrative is this? It's very lucrative, but again, you have to manage your risk. This is not a high risk strategy because you're not anticipating anything. You're waiting for the triggers and you're getting in based on what the market is telling you. Here I got in, if you would see the price action, I got in after this had established that we were gapping up. Now some stocks gap up and then sell quickly back off. You got to wait for it to establish and prove to you that it's going to hold above that significant support and continue to trade higher. So you still have to use common sense. You still have to use technical analysis. But you're holding longer and looking for larger moves. So on these two trades that happened over a course, here's one day, one overnight hold, here's a second overnight hold. That's it. We started on the 29th and finished on the 1st. Both trades together, 84, 81.50. Now I know I'll trade it at 500 shares, but even if you could only trade it 100 shares, look how much money you can grow your account by with just trading at 100 shares or 200 shares, whatever the case is. You have to, how much money you make is going to be relative to how big your account is. You know, and how big of a position size you can trade. A lot of people will say, "No, I need to trade smaller, lower price stocks so I can trade bigger size and I can make bigger money quicker." Yeah, you can lose bigger money quicker too. So you can't segregate based on price. You have to look at stocks that have the best move potential, that's going to be safer, for lack of a better word. And that's all we're doing. We're not trying to guess the direction of earnings. We're not trying to figure out where the gap's going to be. That's a whole nother strategy. Day trading strategy, which we've already expressed how risky that is. Here, you're waiting and you're letting the chart tell you. Even if I only took this trade, let's say it didn't gap up. Let's say it ran up to 140 and then after the announcement, the bottom dropped out. I still got $4,300, $4,400 locked up for 1 day's worth of work. No big deal. If it doesn't set up going into earnings, but it sets up after, if you get the other half of the trade, still should be relatively lucrative, providing that you did your legwork and you know that this stock has the best potential. Now, we did look at, there was another stock that I laid out for you. Let me see if I can find it. Yeah, GIS. This was another stock that I laid out. But guess what? This one gave you the move prior to earnings. But then after earnings was announced, never set up. So there was only one trade in this leading into earnings, because it did gap up and it did make the move up towards 63. It went through 63. It made it, 7 in the morning pre-market. But if you're trading this strategy, you're gonna, even if you don't stay awake, you're gonna wake up and put a limit order in for if it's gonna hit your target or not. But this one, and then you have to decide if a stock is reporting early morning and you're not going to be able to be up when it reports, then you don't need to trade these. Stick to trading the ones that are reporting aftermarket. And that way you're able to wait for the report, and then you could get in and do your thing. And then you won't have to wake up early in the morning to do anything, because you already know where the gap is. All right, so that's just it in a nutshell. Like I said, we're gonna the classes that we do, we're gonna go deep into this. You're gonna understand every step of the process. And again, as in any strategy, it's gonna take you time. Not every trade is gonna look the same. It's not gonna look the same. They're gonna look different. It's gonna be the same strategy, but different companies trade different ways, different stock charts, and you're going to have to be able to identify the setup across multiple charts. It just takes time. It takes time, but that's what I'm here for. All right, so you guys have any questions? On what I showed you today. Like I said, we're gonna get into the deeper stuff. We're gonna get into it. All right, great. No, this is the one from today. You're gonna see. We're gonna have more examples as the class goes. These are the two stocks that I sent out this week, at the beginning of this week. So those are the two that we looked at. And now swing trading is something that I do all the time, whether I'm on vacation or not. It doesn't matter, because I don't have to spend a whole lot of time looking at the chart. It's just a matter of getting in, setting your targets, and letting it go, and enjoying your day. I don't think I'll ever get burned out swing trading, but definitely will get burned out day trading. I always have to take a walk. All right. So I'm gonna keep this recording short. I'll try to keep it under 30 minutes. I'm gonna put this on not Facebook, YouTube as well, so to make it easier for you guys to work it out. Yeah, the rating number, all of those numbers, like I said, I will teach you that in the class. That's what the class is for, because it takes time to explain how to use it, what it means, how it's calculated. So you want to get the full spectrum. And if you don't know me by now, I don't do shortcuts. So we either do it the right way, or we don't do it at all. So I want you to have the best opportunity of being successful. That's my number one priority. And if I ever start cutting corners, some alien being has taken over my body, and don't follow me. There are rating numbers and grades that Earnings Whispers gives stocks, and that's going to help you. It's going to help you understand what the potential is of the stock once it reports. But there's a way that they figure that. You want to understand how they figure all of that stuff. Because the main thing is they give you pretty much all the information you need, and it saves me a lot of time because it helps me focus my research. Exactly what I need to focus my research on, so I could take what they've done and zero in on the chart, the way I see what I'm seeing on the chart, what levels I'm seeing, and how I can work it. And that's what we're going to be going through. And like I said, this is going to go, I'm not going to stop the roadmap to success. I'm not going to stop the roadmap to success to do this. This is going to be on Thursday, and the roadmap's still going to be on Wednesday. But if you go to the website, this class schedule is up. All right. So we're at that 30-minute mark. If you got any questions, just shoot them over. Just keep shooting them over. But I'm going to get this uploaded here.